In the complex world of personal finance, hidden charges can often catch individuals off guard, leading to unexpected financial strain. Whether it is the fine print of a credit card agreement or an overlooked fee on restaurant bill or a sudden increase in loan interest rate, you will agree that these hidden charges can significantly impact one's finances. Hi, I'm your host Ria, and in this video, we will explore 5 most common scenarios where hidden charges may arise and providing you with the practical tips to avoid them. By understanding these hidden costs, you can make more informed financial decisions and protect your money. But before we move forward, make sure you have subscribed to our channel Freedom Money English and download the Freedom app now. Number 1. Credit card charges hack. Credit card often comes with a slew of enticing offers like zero annual fees, cashbacks, high rewards, and much more. However, these promises can sometimes be misleading, especially when they are made verbally by sales representatives. Let's consider a scenario involving Abhishek, who receives a call from a representative offering credit card with numerous benefits. Excited by the prospect, Abhishek is ready to apply immediately. However, terms verbally communicated to him may not always reflect the actual term laid out in the fine print. That is why it is very important to have written documentation to safeguard against potential discrepancies. It is very crucial to obtain all the promises in writing. In Abhishek's case, having the zero charges guarantee in a written document would provide strong evidence if hidden fees were later applied. This precaution is vital because it allows consumer to hold the company accountable if verbal promises are not honored. Written documentations act as a protective measures, enabling the customers to challenge unjust charges with confidence. Next is customer protection measures. If any discrepancy arises despite having written promises, customers should first contact the credit card company to request a reversal of the charges. An email containing the written proof is usually effective first step. If the company refuses to cooperate, the next course of action is to escalate the issue to the RBI Ombudsman. The RBI Ombudsman is an independent authority responsible for resolving customer complaints against banks, and written evidences significantly strengthen the consumer's case. Second, closing a bank account and penalties. Bank accounts that remain unused for an extended period can become a source of hidden charges, as seen in the case of Abhishek's colleague. The colleague wants to close an old bank account that hasn't been used for 2 years and is concerned about penalties for not maintaining the average monthly balance. When an account has no transaction, whether debit or credit, for at least 2 years, it is classified as inoperative. According to RBI guidelines, banks are prohibited from charging penalties or service fees on inoperative accounts. This rule is based on the rationale that inactive accounts should not incur charges for non-maintenance of balance. If a bank insists on imposing such fees, customers should refer to the specific RBI circular outlining this regulation. For example, Abhishek's colleague can use the RBI circular as a reference to having a wrongful penalties waived. Closing an inoperative account should be straightforward and free of any charges, allowing consumers to avoid unnecessary fees. By being aware of these guidelines, individuals can protect themselves from unjust penalties and manage their finances more effectively. Number 3. Restaurant bill charges. Dining out can also present hidden costs that many customers may not initially notice. Many restaurants automatically add service charges to their bill, but it is important to note that these are not mandatory. According to the Consumers' Right guidelines, service charges are at the customer's discretion. If the service provider does not meet the expectations, customers are entitled to request the removal of this charge from their bill. GST on the bill. While GST is a legitimate tax imposed by the government, not all businesses are required to charge it. Smaller businesses with lower turnover can opt for the consumption scheme under the GST Act, which allows them to pay a flat tax based on turnover rather than charging GST on each transaction. If the restaurant is under composition scheme but charges GST anyway, customers have the right to dispute this portion of the bill. Number 4. Loan interest rate increase charges. A loan interest rate can also lead to unexpected financial burdens. Let's take an example. Abhishek is worried about his loan repayment after the Reserve Bank of India increases the repo rate, which affects the interest rate that banks charge their customers. The repo rate is the interest rate at which the RBI lends money to the commercial banks. When the repo rate rises, banks often pass on to increased cost of consumers by raising interest on their loans. For borrowers, this can mean higher educated monthly installments or EMIs, or an extended loan tenure to maintain the same EMI amount. While extending the loan tenure might seem like a convenient solution to avoid higher EMIs, it actually results in higher total interest payments over the life of the loan. This is due to the compounding effect, where interest is calculated on the accumulated interest over time. Number 5. Dark UX pattern in online orders. In the digital age, hidden charges can also manifest through subtle design tactics on online platforms. Let's take an example. Abhishek and his colleague encounter such an example while ordering ice cream online. By paying close attention, they notice a small checkbox that allows them to save on delivery fees, a detail that Abhishek had initially overlooked. Dark UX pattern are design strategies that manipulates users into making choices that benefits the business, often at the expense of the users. In this case, the delivery platform deliberately hid the option to waive delivery fees behind a very small, less noticeable checkbox. Had the user not been vigilant, they would have ended up paying more than necessary. Even for those with the premium accounts that typically offer benefits like free delivery, there may be still hidden opportunities for additional savings. In this case, a small action of checking the box resulted in saving 30 rupees, which could accumulate over time if such diligence is consistently applied. Well, in order to conclude, it would be right to say that hidden charges are a common pitfall in various financial transactions, from credit card agreements to bank account closures to dining bills to loan adjustment and online purchases. By staying informed and vigilant, consumers like you and me can avoid these hidden charges and make smarter financial choices. Always seeking written documentation, being aware of relevant regulation, carefully reviewing bills and terms, and paying attention to small details can save significant amount of money in the long run. As financial product and serving continues to evolve, so too should the awareness and preparedness of consumers in safeguarding their financial well-being. Well, that's all in today's video. Hope you enjoyed this video. Make sure you share this with your friends and family and subscribe to our channel Freedom Money English for more such interesting videos. This is your host Riya. We'll see you in the next video. Till then, take care. Bye-bye.